Welcome to the Elite Real Estate Leaders Podcast, brought to you by Trailstone Insurance Group, bringing you interviews with the best real estate and mortgage professionals, empowering you to understand the current trends in the housing market so that you make the American dream your reality. Enjoy today's episode.
Welcome to the Elite Real Estate Leaders Podcast. Today we have with us Dawn Morin, who's a branch manager with Equity First Financial. Dawn, welcome to the program.
Thank you. Thanks for having me.
You are welcome. I would love to start off. I always like starting off conversations with, tell me your story. You know, like there's so much that you could learn about people's background. So how did you get into the financial services, mortgage, lending industry in the first place?
Well, it's kind of a funny story. I actually started out in restaurant management, and then I owned and operated a restaurant and catering company for more than 10 years. And as I was getting a little bit older, I decided I didn't want to run a restaurant any longer or work those long hours or weekends.
Yep.
And so I decided that I would look at another opportunity to where I could be in control of my own hours and income, and I wasn't capped on income. And so that's how I landed in the lending industry. And that's
So did
pretty
you
much
know
how it worked.
someone that was a lender and they introduced you?
No, I actually knew a group of realtors that I was friends with, and that's kind of how it happened, because they were kind of complaining about the lenders that they were working with and
Ah.
dissatisfied. So it kind of put a little spark in me to do some research on that, and that's how it all started.
You know, it's interesting. I always like to read between the lines and extract out nuggets of knowledge and truth. And what I heard there was networking. Right. You were looking for something and you went to your network. You went to these contacts you had, these real estate agents, and then you noticed pain and frustration. They were complaining that, oh, well, we can't. And you thought maybe to yourself right then, maybe I can be that solution. Maybe I should do that. And I think that's so interesting because I feel like we all have opportunities that come across our consciousness, our path, our day. Every single day, every single week, we just need to slow down enough to watch for them and capitalize on them. And I think that is so neat of an example of how you got from the restaurant business into the lending business.
Yes.
But you
So
got a little shock when you learned that hours were not much different, except for you could do it remotely.
Correct. I still
Be
work
willing to
nights
bet.
and weekends.
Thought I'd throw that in there.
Mhm.
Yeah, you can name your own schedule, but yeah, it's definitely not a punch out, punch in. And you know, I've often used the example before, like, hey, if you are a airline pilot and you take vacation, some other pilot flies the plane. But in the real estate mortgage industry, when you're out of the office or on vacation, it's rare that you have the freedom to have someone else completely know exactly what's going on with every file, every client. So you tend to kind of always be on, but that's kind of that aspect of serving and giving and providing value. So I'm sure that is part of your DNA coming out of the restaurant business.
Absolutely.
So what kind of, when you got initially into the business, what kind of borrowers were you working with? How did you serve your clients?
When I very first started, my main focus was first-time home buyers. I remembered when I was a first-time home buyer and I didn't really have anybody to help guide me through the process. And I remembered how frustrating that was. And I just needed somebody to really just explain it to me, explain the process. I was brand new at it, somebody to kind of handhold me a little bit. And that was where I felt that I could be the most of value for people, is to help people, guide them through that process where I didn't have that guidance. So that's where I started, was with first time home buyers. And then of course it just, evolved from there. The more experience you gain as well yourself in the industry, and the more you help people, the more experiences you have, then the better you can become and the more people you can help.
It kind of folds upon itself where that first time home buyer and you develop that relationship with them. Well, years down the road, they need to sell and buy something else. Well, now they're not a first time home buyer, but they need to, get financing for their next place, or, oh, we want to fix up our place. So I think it's really just neat that you just kind of keep building those relationships and then you see what opportunities present themselves.
And
Absolutely.
they're also so thankful, right? I mean, I feel
Mhm.
like the first time I bought a house, when someone walked me through it, I was like, "You're my lifesaver." So
Mhm.
I feel like it's just kind of a kind of a relief almost from other people who aren't as grateful, like they've done a million transactions and they're kind of like, just do your job. And then, you get the first time home buyer and they're like, oh my gosh, let me bend over backward to get you this doc. And you're like,
Yeah,
wow, this is quite the difference here.
for sure. For sure.
So
I
what
still
are
keep in
you,
contact.
oh, go ahead.
No, I was just going to say, I still keep in contact with those very, very first people I've helped. And then
Yeah,
I've helped
loyal.
them, I've helped their kids, other family members, and so on and so forth. But I still keep in contact with those, even those very first ones that I helped
Right.
15
It's
years
the best
ago.
referral source, honestly.
Hmm.
That's awesome. So what are you focusing on these days, in addition to, first-time home buyers when they come up, or second-time home buyers, but what kind of loan programs are your focus now?
So now I've shifted tour. Of course, I still maintain doing residential and helping first time home buyers and everybody else who needs a residential loan. But I've shifted gears a little bit in helping small businesses, large businesses, anybody who needs any kind of business lending. If you need some money for equipment leasing, for startup, SBA loans, all of those types of loans, I'm now um, being able to offer those, and it's pretty exciting, especially coming from someone who owned a restaurant and had to
Yeah.
navigate that all those years ago. I had an SBA back loan when I opened my first restaurant, so that
Full
it's
circle.
pretty cool. So I have experience on the other side of the process. So I think it gives a lot of value for me to be able to help those people who are new or scared or just really don't know anything about the process.
100%. And you might find that first-time home buyer that you stay in touch with wants to buy a business, and then they need a commercial loan to buy that business for that startup. What are some of the key differences between commercial lending and residential lending for the borrower?
So there's two kinds of credit, actually, and a lot of people don't know this. So there's your personal credit, where basically that's what we do to qualify you for a residential home loan. But there's also a business credit profile. And a lot of people don't know that they're not connected. They're two
Mm.
separate things. So I also am able to help navigate. So somebody might have a wonderful 750 credit score, but their business credit score is, not good or fair or below par, because they don't know how to maintain that business credit profile. So I would be able to help you set up your business credit profile, or what you need to do to show that you're just as strong of a business borrower as you are a personal borrower. So that's one of the differences, and one of the ways that I can help folks with their commercial piece of it.
So when the commercial lender looks at a file, are they literally not looking at the personal credit of the borrower, or are they focusing more on the business side and then they balance it with the personal?
So some don't even look at your personal at all. They only look
Wow.
at your business profile, but most look at both.
Yeah. You'd have to. I mean, I would think you would
Mhm,
have to.
mhm.
So I know on the personal side of things, it's pretty common to have someone in the lending industry go, "Oh, if you have issues, I can help you correct this or update that or increase your credit score because if you pay down credit cards, that could be helpful, but don't close them down." Things like that. What are some of the things that a business credit file? What could you do to improve or build your business credit file? Because maybe there's some people looking to do a startup or get that SBA loan, and maybe they have a blank slate. Where do they start?
So they would start with creating a business bank account and
Okay.
under your business entity name. So you would go to your local bank and open up a business bank account. And that's basically where you start, is there. And then from there, you can get credit cards in your business name. You can start building business that way. You can put some of your, so say you're uh, let's see, say you have a paint store and you have a delivery service, and that delivery service needs a van. You can put that van in your business name, and that's another way how you could grow business credit. Just like if you were to buy a personal car for yourself, that's going to go on
Yeah.
your personal credit. And that, so it's basically the same for business as it is for personal. You're just putting those assets and those things in your business name, and
Yeah.
that's
And
how
you
you're
might have the
building.
cash for that
Mhm,
van. You might
correct.
be thinking, "Oh, I've got the cash for it, but hold on. Maybe to build my business credit file, let's go ahead and get a loan in the name of the business, and then I'll make payments so that I'm building it similar to building your personal credit side." But I think it just kind of takes that from what I'm hearing you say, it takes that focus and know that if I need to get that loan and they're going to look at the business credit file side of things and I don't have much, well, how do I start building? And that's a really good example.
Mhm. That, yeah, and that's
Okay,
exactly
so
how you do it.
I know this is a common question on the residential side, right? There's this huge controversy. Do you need 20% for a down payment? And obviously, we know the answer is no, but I'm kind of agreeing in the commercial side. What does that look like? Do you need that 20% down payment, or can you do the SBA loan without it? How does that all work?
You can. So SBA loan is basically like an FHA residential loan.
Sure. Okay.
The
Good
minimum
analogy.
required down is basically going to be the same as an FHA loan. So
Huh.
you're not gonna need as much down. Now, if you're gonna go a different route, yes, you probably would need 10 or 20% down. And in some cases, 30. It would depend on the credit profile. And everybody's different. Everybody's situation is different, just like every business is different. There really aren't any two that are really, the same when it comes to your credit profile and your needs, um, things like that. So a restaurant might be a little bit more risky than, say,
Mhm.
uh, you know, a dentist office. So the
Hmm.
dentist office, their their overhead is probably not as much. Their cost of goods is probably not as much. So it's all depends on the risk factor. Some businesses are riskier than others, and there's a formula there that will determine where you fall in your risk factor, and then that will determine what kinds of terms and lending that and money that you can get with that.
And similar to a first time home buyer, where maybe you would want to start with an FHA loan, which is lower down payment. Then over time, when the house gets more and more equity built up, maybe then you look at replacing that with a conventional loan. It's probably the same with an SBA loan, right? Where maybe you would want to start with an SBA loan, and then over time, once there's established, history and whatnot, maybe then get into a more conventional side of things. Would that be the same kind of a setup?
Yes, it would. So most of the SBA loans, they're adjustable rates. So
Mm.
when, you
I was
know,
going to ask you that.
the yeah, so when the rate adjusts, when the margin adjusts, then so does your payment. So you'll want to, keep an eye on that. And it's great for people who are basically new. Now on SBA loans, a lot of them they require that you're in business for 3 years before you can get an SBA loan. But there are some SBA startup funds as well. There's also other ways to get money to get yourself to get started up. And then after you're in business for a couple of years, then switch to an SBA loan if you need a bigger space, if you want to expand or do more things. That's another way to look at an SBA loan, because you don't have to have so much down. You don't have to have that 20% down. So there's so many ways to get that kind of funding.
How many are you just one product, or are you a bank, or do you have access to multiple products kind of similar to a broker? How does that work?
So yes, I am a broker, a commercial loan broker as well. So basically I could get money for people who just maybe need a little help with cash flow. There's cash flow loans, there's startup loans, there's money to get equipment. Say you work in a ski area and there's certain months that business is just booming, but then there's other months where people aren't skiing, and maybe business owners need some money to just kind of to get through till the busy part comes again, to maybe make payroll or make some upgrades or changes or things like that. There's loans out there for that as well.
Okay, that's interesting, because I know with a bank, like they only have one person that they can kind of approve. But if I were to have some less than favorable terms, you could find someone for me?
Absolutely. And some of the lenders, there are a few of them that will go down even with your business credit score and your personal credit score down to a 580. Now, now let's face it, when there's challenges and there's more risk, because that goes to your credit profile, the rate, of course, is going to be higher and the terms are probably going to be shorter.
Okay. Like the how many years it is that what you mean by terms?
Correct. And it could be you maybe only need a short-term loan for 12 months.
Sure.
Those are out there too.
What's the highest you go up to? How many years?
30-year fixed.
30?
Say you purchased a piece of property and you just, it's going to be your business. It could go that high, or it could be as short as 9 months. And it all depends on each. Sorry, go ahead.
No, I was going to say, I kind of considered myself someone who knew a lot about lending, but I didn't know a whole lot about the commercial side. So I think a lot of people are going to listen to this and really get a lot of it. I'm trying to ask you questions that I'm like, how does this make sense? So I appreciate you answering all of that.
Well, it's great. I'm happy to help. I really am. And it's an area where I personally have experience from being on the other side being the borrower, and now the experience of being the lender, and that how there are not everybody fits in one box. Every situation is different. And I find it incredibly rewarding and interesting to find out about all of these different things, different businesses, why people need money, what they need money for, equipment leasing. And equipment leasing doesn't mean that you just rent it. Equipment leasing means you lease it until it's paid off and you own it. That's what equipment leasing is.
Okay.
So Dawn, I know that you can read the headlines every day and things change, and rates are up, rates are down, the economy's great, the economy's not. What are some of the things you're seeing currently in commercial lending regarding kind of trends? And then where are you seeing things going? Because I think that there'll always be a need for people wanting to buy their first home, but then when rates go up, it kind of cools off a little bit until things move. What do you see in that same realm on the commercial side?
So the commercial side, it seems to be a little bit busier, because when things cost more money or people are on terms. So say you send an invoice out, say you are a person who sells dental equipment. Actually, not equipment. Let's say if you're a person who sells like all of the things that dentists need for their supplies. Okay. So like their gauze, their whatever dentists need. but you're on a 30-day term. So you're the supplier and you've sent out the product, but the business, the dentist that you sent it to has 30 days to pay you. Well, you need to keep buying goods to be able to supply these people in the interim while it takes them their 30 or 60 days to pay you. So there's loans out there that you can get based on your invoices that you have out. So that is another way to kind of help. And I've kind of seen more of those loans as, people take time, but you still have to be able to keep your wheel going with your supply chain and to be able to get stuff so that you can sell that out as well. So to be able to keep yourself going.
So let's say that a business comes to you, gets the loan, you get into that first, whatever the business is. Let's use restaurant as an example, and things are clipping along 2, 3, 4 years down the road, and they want to expand. And okay, now let's do another loan. I know on the residential side of things, there tends to be a cap on the number of loans that someone can have, and maybe an FHA could have a cap of whatever the number is. Is there a cap on the commercial side of things to where, oh, I'm sorry, you have 5 loans to get 5 restaurants. They're doing wonderful, but we can't do that anymore. What does that look like?
So that is actually on an individual basis, and it's going to go according to an individual profile. So your profile. So there could be a restaurant owner who needs a loan because he needed new refrigeration or he needed new chairs. So each one of those vendors, where he got equipment from or whatever he needed the loans for, maybe he does have 5, but they're all for different things. Something like that, you can't really kind of put a big blanket on it. It would be an individual thing and how they're paying their stuff. There are some lenders though that will not loan to you if you have more than 2 business loans out, and then there are some that will. So it would really just depend. So just like with banks, there are some banks, if you were to buy rental properties, they might cap you at 5 properties where another one might go to 10. So again, it would depend on the institution that's doing the lending and your particular credit profile.
Just like with most things, there's never one answer for everybody. It's a case by case. Let's see what works. Let's ask the right questions. Let's see what the needs are and craft the best solution for you. And you being a lender versus a captured, bank type of a situation, you can go out and shop and find the very best circumstance for that borrower and really put their best foot forward. So I think that's a huge takeaway there from what you're describing.
Yeah, absolutely. And I've had people come to me where they have been turned down by, say, Chase or Wells or one of the big ones. And they're like, but my credit is good and I don't understand why I'm not getting that. And that's where I help them with their business credit profile, because that is one of the factors. And then, presto changeo, I'm able to get them the financing that they were initially looking for. It's just by doing things like that and meeting with the people and just looking at the whole picture and seeing how we can help them. And I actually do help a lot of people who have been denied by the bigger banks, and I am able to get them done.
I love it. Well, Dawn, it's been really eye-opening and interesting to hear how you got into the business and then now your passion for commercial lending and some of the tips and strategies that you're using. If someone is listening to this thinking maybe there's some ways that you can help them, how can they learn more and then also reach out and connect with you?
Well, by all means, you can go to our website. And secondly, you could call me. And my phone number is 720-376-1008. And I answer my phone whenever I am available.
Excellent. Well, Dawn, thank you so much for coming on today. It's been a true pleasure talking with you.
Thank you so much. And equally the same. It has been an absolute pleasure. Thank you so much.
Thank you for listening to the Elite Real Estate Leaders Podcast, brought to you by Trailstone Insurance Group. To learn more about the topics mentioned on today's show or listen to past episodes, visit www.eliterealestateleaders.com.